are live. Hello, everybody. Welcome to the TraderMerlin Show. It is your Thursday edition. We've got people from all over the place. Hello, Dina in Redondo Beach, right down the street from me. My aunt actually lives in Redondo Beach, old pumpkin pie. Les in Cape Canaveral. We got Rob up in gloomy England. Well, every day we're on the right side of the dirt, Rob, is a good day, regardless of what the sky tells us. And everybody else, hello, Izzy, Alex, down in Texas, Big Ab, Sue, Thomasina as well, and Kenneth Chu. Good to have you, Kenneth. You sound, it might be a new name out there, Kenneth. You guys are, anybody who's new, hit that subscribe button. We do the show every day, plus I'm releasing some other content here in the near future. So if you subscribe, you'll be the first to know about it. All right. My guest today is no stranger to the program. When I did Power Trading Radio for essentially 10 years, he was a regular fixture on that program, offering content that ranged from kind of just straight technical analysis to a lot of fundamental analysis, because one of his mentors just crossed the $100 billion net worth mark. Talking about Mr. Warren Buffett out there. That is not my guest today. My guest is a protege of him, I guess you could say. We've got Mr. Larry Jacobson joining us today. Larry, how are you doing, my friend?
Doing great, Marlon. Great to have you. Get me back on the show. It's been a while.
It has been a while. I need to get you on more frequently. How you been? What you been up to?
Working. Just, a lot of stuff going on. Really great things. New things with CliK, which has been amazing. I just saw a prototype of something new. It's just, the innovation's been unbelievable, and I love being part of the development team.
Yes, it's exciting to design something from the ground up. And as we get live trading on that one, I'll be doing more shows on CliK. Right now, we're doing a lot of just development and releasing the different asset classes. So I'm pretty excited about that. I will set the stage here a little bit for what we're going to discuss today. You guys may have seen the title. You may not even have an interest in Nvidia at all. But I think what you'd be interested in is the way that Larry went about the selection process here. And really, the title for today is the trade update, because back in 2016, Larry was on the show and he presented me with a stock. He says, hey, here's one that I'm adding to the portfolio. I track this portfolio. It's basically off of fundamentals, and Nvidia is one that I'm looking at, and it was trading right around $69. And I remember he goes, yeah, I was looking at it when it was 35 or 39 bucks, and that's when I made the call and got in. And I'm thinking, shit, man, you're up 100%. I would take profit. I'm up 100%, I'm out. And you go, no, my target is $350. And I just kind of scratched my head a little bit and said, okay, Larry, whatever you're smoking, buddy. He kept on explaining it. We went through the fundamentals with a fine-tooth comb, and he had some great arguments as to why he thought it would go to $350. Now, I will bring up the chart here just for everybody so you can see what's been going on. And it's been so long since he made this call. In 2015 is when he made it initially. I heard about it in 2016. Here is Nvidia, and I will make this big. I'll put it on a weekly time frame for you so you guys can see what it has in fact done. And you can see long time chart here going back into 2016 when I mentioned it. We're down at the $60 mark. We breached $350 all the way back in June of last year, and we eclipsed $600 recently. So long-winded talk track for me, but bottom line is, congratulations, Larry. You hit your target on this thing. Let's talk about the evaluation on Nvidia, why you like it, what do you think, and then we'll get to kind of what's happening right now and move forward from there.
Well, Merlin, it was funny because when we first started to talk about this, and you and I were talking about and joking about it the other day, it's hard to believe it's 5 years later. But how this all started was you were tracking the anti-Kramer portfolio, if you recall. And I just kind of said, why don't we come up with like a value investing Buffett type portfolio? And you were up for that. And so One of the first ones we took a look at was Nvidia. Now, at the time, Nvidia was an up and coming chip maker. But what caught my eye, and I think which is really big, is the fact of there's actually a news article that I don't know if you want to bring up to show. This is kind of how it all started with Nvidia for me back in 2015. I got wind of an interview that the chairman of Nvidia was doing, and he was adamant that his company wanted to be the premier chip maker in driverless cars. And back then, around that time, we all know how that all tends to work and what's going on. And so it was funny to kind of start off by saying, I think this will be a future thing to look at. And, in terms of value investing, you're not looking at necessarily what the stock's going to do today, but I'm more interested in what it could be doing 5-10 years from now. Mm-hmm. And so we kind of joked and said, maybe back then, which doesn't seem that far ago, 5 years ago, people weren't quite ready yet for the driverless car. You know, it was like anything else. I'm sure the first plane trip, people were scared to get into something that went off the air. And over time, people became a little more comfortable with it. So we kind of looked at it, but what caught our eye was the fact that it was so low at that point in time. And so I started to get re-engaged back into value investing. And so a lot of the tenets that I went through are things that Benjamin Graham used to teach at Columbia University, and how you go about determining what is the intrinsic value of a stock, meaning what should the stock really be worth at this moment in time, regardless of what the stock price is trading. I want to know what the company is worth.
Right.
And at that time, when you and I started talking about it, it was in the 30s, but it had a intrinsic value of near 100. So we always are looking for a 50% discount. This one was ridiculously low. It was over 60%. And so we took a shot at it. And then when we came on the show and you asked and said, hey, you know, why is it that you're not selling right now? And I said, I'm not in this for a short-term trade. I'm in this for a longer-term investment. And so I felt at that time that Nvidia was strong. It had good fundamentals. And this could be something that could be great in the future because of where its true valuation was compared to what the stock was trading at the time.
You know, and I have the chart up here that you sent me, and this is back when Larry really was into it, was November 27th of 2015 at 31.39. And it's funny, if we, you know, obviously if I look at the current chart, it's you see what happened, and you know, we can't go off of that. But what would be nice is to scroll back here. So let me go to when he was on Power Trading Radio, and that was, I believe, was in 2016, and it already had a monster run. So imagine, guys, Larry comes to me, and I'm going to tell you guys the same picture here. If you all look at this picture, and Larry, I know you can't watch the stream, but I basically have the weekly chart of Nvidia from 2012 to late 2016, and you can see that from 2012 to 2016 looked nice. You know, it was a nice uptrend. Higher highs, higher lows, just grinding. Then late 2015, it started to spike. And then all of a sudden, 2016 was a banner year for this thing. It went from $25 up to over $65 in just a few months. This is when Larry came on the show. Now, everybody that's watching this program right now, get your keyboards ready. If you came to me and you showed me a stock that had gone from, in just 4 months, from $25 to over $65, what would I tell you? What would be my encouragement for you to do, right? Would I say to double up? Would I say to load the boat, mortgage your home, and buy more? Would I say, you know, dump it all, run to the hills and get away from it? Or would I say, you know, maybe sell half your position and trade manages? What would I be saying here? And of course, you guys all know the result because I think we alluded to it at the beginning. Larry says, well, what would you think? I said, I'm out. I sell your position, dude. You're up well over 100% on this thing, so why not take it? And then I asked you, Larry, and I thought this was probably the best part. I asked you, well, why? You know, and you went, well, the fundamentals. And I'm not a big fundamentals guy. Fundamentals for me are kind of like French. I told my French story the other day. I kind of boycotted French just as the language. But for me, fundamentals is what was taught in high school. And not high school, college. And my college professors, I wish I could remember one in particular's name because he was one of those worthless teachers I've ever encountered in my life.
What was it, a monsieur or was it a mademoiselle?
No, it was just some old white guy, but he was just, in hindsight, I look at what he taught, and it's embarrassing that this university let this guy in. Absolutely embarrassing. I could run circles around him. Anyway, it's not about me. It's about the content. Anyway, fundamentals is what was always preached to me and pushed to me, and I'm an impatient person. I want results quickly. And fundamentals take months to years to pan out. You can go back to this trade in 2016. You know, it took already a year to get to where you thought it was going to start to go, another 3 years to get to your ultimate destination. I don't have that kind of time, so I boycotted fundamentals. I'm looking at technicals on this one, and I said, boy, sell that. You kind of chuckled at me. You threw it off. You said, no, I'm staying to 350. Let's fast forward a little bit here, and I'll show the chart what happened, and it's a thing of beauty here. If I scroll on this chart, guys, it just kept on going. Boom. I mean, it was just monstrous. And I remember every time he came on the show for the next couple years, he's always like, oh, let's look at NVIDIA, and I'm just shaking my head going, damn you, Larry. Here's where it gets interesting. You can see that in 2020, I'll put a line right on 350 for you. Boom, there's 350. It smacked it. Now, Did you dump at 350 because that's where you said you were going to?
No, because again, what you got to remember is it's more than just what's trading on the chart, what's happening to the fundamentals of the company as well. And so at that time, it kept increasing, and we were able to keep reforecasting based upon the great results that the company was doing.
Right.
Now, it was interesting as a side story, when I came to you, it was about the driverless cars. What Merlin came back at with me was, you do realize that Nvidia is now making premier chips that are used in gaming systems to mine for Bitcoin.
Right.
And of course, back then I'm like, oh, yeah, this thing called Bitcoin. Well, that really is what I believe skyrocketed Nvidia more than this potential of having driverless cars, because we're quite not there yet with the driverless car, even though it's being tested. But it's interesting to look at it from the standpoint of gaming. Everything started to come into its own really in this last 5 years. It's getting more unique. It's getting more diversified. It's becoming a real thing. And so the technology just has come alongside, and Nvidia kind of forecasted that. And so I'm really impressed with the CEO because he's smart. He runs a great company. They're very vision focused, and they're looking to even keep expanding. So right now, kind of what I realize is if you're ever going to do a value investing type of a trade, you have to be committed to it for at least 3 years. And so that's where you're saying, well, 3 years later, it finally, yeah, that's about as long as it takes, because we're not looking for necessarily rocket results like you might be looking at a shorter term chart because you get in, it makes a nice move. This is a commitment to owning the company. You believe Nvidia is going to be strong. It's going to be around. They've got good management. This is a company that's going to continue to grow on its own earnings and results. And that's exactly what Nvidia has been doing.
Nice. All right. So on that note, you mentioned 350 was your target, and I got people here asking. It's nice. And I agree with most of the audience. What I probably would have done is take half off and then trail the second half, let it run, right? But everybody's going to have their own different strokes here. Alex says, did you sell at your 350 target, or is you still running with it?
Still running, because there's no reason to sell, but we'll talk about a little bit in the future, when we talk about future, what I could be doing or what you could be doing while you're waiting. See, everyone believes that I've got to sell. Right. But again, you're in a different mindset, right? I want to own this for the longer term. So where maybe some traders are on daily 60, 15-minute charts, I'm living on monthly and weekly charts. So if you bring up the monthly chart, for example, we're still in a very nice uptrend, aren't we? And so now it's going to be very interesting.
It's funny, Larry, I pulled up the monthly, and I don't know whether I'm looking at Bitcoin or Nvidia. I mean, the chart looks as like they're just both parabolic runs.
Yeah, they've been great runs. But the fact right now is this is an interesting time, isn't it? Because we're seeing the basing coming into Nvidia, which could be one of two things. It'll continue to rally, or we might see a pullback. So when we get into future, we'll talk about if you're nervous right now about protecting some of the profits, and Merlin knows what I'm going to say because it's my other passion, why wouldn't I consider protecting my portfolio? Couldn't we do that with health insurance? I mean, when you pay car insurance, you're doing so for two reasons. One, you want to make sure that if you're in an accident, you're protected. And two, you want to protect your assets, because the worst thing that can happen is getting into an accident and then somebody suing you. So, the same thing happens with a chart. A lot of people just trade without having a plan, and that's where they get into trouble.
Absolutely. Now, on that Nvidia chart, so we're there, we talked about the 350, and I think that this is an important piece for the whole discussion is, we had the 350 target, and as it got there, I think one of the great things about fundamentals, and same thing with technical analysis, is we can change our plan. We're going to modify as we go, and as it got to 350, he went again, as he was doing the whole process, looking back at the fundamentals, and the fundamentals changed their story. It no longer gave you an estimate of 350, it gave you an estimate that was a bit higher. So let's move forward through NVIDIA through today. You kind of highlighted it here with the yellow box that we've got chop really for the past 8 months or so. It's a very wide range, but we haven't seen the ballistic straight up moves in NVIDIA. Some might call that chop or consolidation. What is this telling you, and how has this changed your forecast for NVIDIA?
Well, again, it really hasn't. But right now I will say that we're at fair value on NVIDIA. Okay. Right now, it's around at least at how I'm calculating, it's around 443, and we're sitting at 498. So what that means right now is I'm at fair value. So do I want to continue, or would I like to set myself up that if there's a reversal and it pulls back, can I buy more and could this go higher? So can we talk about some things in the news with NVIDIA right now? Because I think you can't just talk about the trading without understanding why, or the thesis behind why NVIDIA is still a good company.
Right,
so you want to kind of switch to the today. So first thing I kind of pointed out, I don't know what you're going to be sharing, but believe it or not, NVIDIA's core business or its strength right now is in the gaming segment. It still is looking to do the driverless cars, which got me interested to begin with. But right now, it's a dominant player and will continue to be a dominant player in the gaming segment. Mm-hmm. And they're blowing away, as you'll see shortly, their key competition. And so what they're looking to do is continue to exponentially grow. And we're doing it through what they call their GPUs. Now, Merlin probably could give you a whole better definition of the GPUs than even I could do. I'm not really a gamer, so to speak.
GPU is graphics processor units. Basically, just it's a dedicated chip that's purely for graphics and nothing else. And again, we can't understate this enough, or overstate this enough, is they are, I don't know if we overstate or understated, but they are the chip. I mean, if you're into graphics, it is the company to go to for graphic processing units. This is also a very hot chip maker for mining of cryptocurrencies. If you can't buy an ASIC miner, you're using Nvidia or some high-end chip like this. So, that is back in 2017, 18 when we were talking about it. I brought up that point. I said, hey, listen, this Bitcoin mining thing is really one of the major drivers. And we had this great discussion where I was saying, hey, I think it's overvalued because of the pop that just Bitcoin mining gave it. And I think that's going to contract as more competitors come in. And Larry kept saying, I'm looking longer term, man. I'm looking driverless cars down the road. They're the pioneers. They're the ones that are entrenching themselves. So there were a lot of areas that NVIDIA was going into, and I think that this is one of the measurements of a great company is you don't want to be that one-trick pony. Zoom, for example, you do one thing. NVIDIA is doing creating these chips, but it's used in so many different applications. You create that kind of dependency, which has made it the benchmark of the industry right now.
Yeah, and I mean, let's face it, how many of us would have loved in the early 2000s to have been buying Amazon stock, right? In the beginning, Bezos was out there peddling it. And there's even another one that I share with Merlin. If you want to bring this up, before you do, let me just set the story. I like to look at different products and see what's out there. And around that time, there was a new beer that was coming to the market called Boston, Sam Adams, Boston Lager. The problem was most people didn't know about it. The guy, I read an article, was going literally bar to bar in the beginning to sell the beer. And the beer caught on. And what I want to show, if you want to bring up that chart, around 2000, I bought Sam, which is the ticker symbol for Boston Beer, at $12 a share. Look at it right now, Merlin.
You could buy a few cases of beer for that.
But this is the point. So when you have a great business and you have a great business model, you have amazing leadership, who's to say when to get in and when to get out? It's really, if you're buying along the way and you believe in the company, see, this is the big difference. When we're trading, we're not really at all committed to the company. We're just saying we believe there's going to be a rally drop in price, either created by an event or by a zone or something that's going to cause price to turn. And what we're really doing is taking a little bit of this and that. I mean, but for those who are more investors, they're in it for the longer term. I mean, you've got people out there right now that have inherited Coca-Cola stock from their great-great-great-great-grandparents, right? And so this is where it's so important that when you start analyzing a company or a stock, you have to have a plan in place. And so the reason I'm just bringing up Amazon or I'm bringing up Sam Beer, how much would you have kicked yourself if you got out of the stock and walked away from it simply because it doubled or even tripled?
Yeah.
And so this is why understanding and making sure that you understand why a stock or a company does what it does is crucial. And so many people out there are not educated. They don't know why they're doing what they're doing other than it either is hot in the news. And, you and I, Merlin, did that show a few weeks back on the short squeeze with GameStop. Same thing. People are going to react off of emotion versus what a guy like Warren Buffett or Bill Ruin, who was also a classmate of Buffett's under Graham, they were taught to patiently wait for price to come to them.
Right.
And Charlie Munger once said, okay, we're not in there trading this or that. We don't basically sit in anything, but when that moment arises, we go all in, which is kind of counterintuitive, isn't it?
Yeah.
Because we're taught don't put your entire money into one thing. They do, because they're that convinced it's the right play at the right time. And so we talked about gaming. I can quickly go through a couple of other things. They're also right now dominant beside that. We talked about the gaming, but they're also very, very good at their supply chain. So it's very possible right now with the pending acquisition of ARM that they're looking to expand. Now, obviously, you got the antitrust, and you've got to go through all the regulators until they finally sign off on it. But imagine they're now acquiring another graphic designing company that could really help spike this. And right now, here's the interesting thing I read. Certain people are saying it's undervalued right now. So think about that. At $400 for a stock to be considered undervalued, for a lot of people, when they see a stock at 400, it seems too much. So you know what you do? Chop a zero off of it and ask if it was too much. Chop 2 zeros off of it and ask, would you buy it if it was at 40? Would you buy it if it was at $4? If the answer is yes, then it shouldn't make a difference that you're buying it at $400. So this could be an incredible competitive advantage for Nvidia if they are able to acquire ARM. Another important point here, and I thought this was kind of cool on statistics. So if you're talking about GPUs, like you said, Merlin, they're expected to remain strong, Nvidia. Right now, they have about 12% of the expected compounded actual growth rate of the entire gaming industry. Wow. So they're controlling 12% of the market right now without anybody coming close to them. They're also established in high-powered computing in terms of their infrastructure. So they do more than just the gaming, obviously. And Forbes magazine recently said the top 4 cloud companies in the world have utilized NVIDIA's Tesla range of accelerators in 97% of all instances, which is incredible. And they're far exceeding AMD and XILI and even Intel, who are only about 1% market share. So think about that. They are way ahead of their competitors right now, and they even have a manufacturing, they're even leading the way in manufacturing as they move into 2021, because many producers acknowledge that there's right now, I don't know if you guys realize it, there's been a chip shortage.
Yeah.
Right? With everything going on with COVID, they haven't been able to produce the chips at the volume they do, but based upon NVIDIA's market share and how they've managed through COVID, they are being said they are the most prepared for when the market reverses and comes back. And so NVIDIA's already been shifting its production to Samsung, believe it or not. So they're in Samsung right now as of December, so they are definitely better poised to pump back to the shelves when ready.
In a lot of stuff to talk about there. Obviously, you can tell that in his research, guys, Larry's looking at a lot of the pertinent information that's going to fuel that growth going forward and help him achieve any targets. There's 2 things I want to cover, and one that I'm hoping that the viewers are going to ask as well. Not ask, but see as well. I'm going to bring up that Sam Adams here again. And, you know, if we go back to where Larry was talking about, obviously we'd love to own it at $1,100 or own it at $12 and sell it at $1,100. But, you know, he's talking about $12 here. So let's just go and put that number. That was a long, long time ago. But I'm going to try to just visually show you what I'm thinking here and kind of how my mind works. Because there's no way I would have let this happen. You notice that this line here, I'm going to put it as close to $12 as I can get. It's at 14 right now. That's fine. And you can see that as it's going up here, I mean, he was at 12. This thing rallied up to about $55. This is where Larry and I are going to differ dramatically, because if I own something at $12 and it rallies up to 55, even though I'm thinking long term, I'm going to continue to move my stop loss up. And it fell from $55 all the way down to a low of 17. I can't let that happen myself. I wouldn't do that. But Larry, you're okay with that type of thing, right?
Yes, because of the fact that I will use other things to protect my position while I'm longer term. So that's the key here. It's not just I set it and forget it and don't manage it. I am constantly looking. Merlin will tell you, I send him stuff every Friday, mostly to tease him about Live Nation. But more importantly,
I hate Live Nation.
No, do you really?
They're
So anyway,
they're the organized crime of ticket sales, guys. Oh, I just can't.
hey, hate the game, not the player.
God,
So anyway, the bottom line right now is that if you believe in this, there's a way that you can protect your investment for the shorter term, for the longer term, if that makes sense. And I will talk about that when we start to get into the future part of the NVIDIA discussion.
Well, let's head down that path because I want to get into some other stuff here. We got a bunch of different questions. And Angel,
Sure.
you can stop asking about PLTR. We'll get to that if we have time. But no, I'm sure neither of us are in it in PLTR. But we'll look at it later on.
Okay, so the last thing I want to show right now, and you might want to share that little statistic I thought was really cool. So I want you to take a look at about the targeted market. Do you remember the market slide I gave you?
Yep.
So they are really looking at NVIDIA, including potentially ARM in here, if that acquisition goes through, of a $250 billion market valuation by 2023. Think about that. 250, this is a billion-dollar company now, and you can see how they're breaking it apart. So their devices are about 95 billion, their data centers are about 80 billion, and there's their automobile business at about 75 billion. So they're into robotics, they're into auto, they're into computer gaming, they're into Bitcoin.
But they've already got a market cap of 322 billion. So I mean, you've already exceeded that, Larry.
Right. But I'm saying, but that's what they're saying here. So I'm not going to put a number on this. I'm going to go until it tells me it no longer wants to go. But if we're in the infancy of so many things right now, you know that they're going to pivot much faster than most because they have the market cap to do it.
Well, and also, I think what's interesting here is when you are that big, you can start to squeeze out competition and raise that barrier to entry. So they've definitely solidified themselves as being the number one. And it's not just that they've done, competitive tactics to squeeze anybody out. They've just delivered the best person or the best equipment and technology out there. So hey, good for them. All right. Absolutely. So here's the question. I believe you said fair value was 440. It's trading at 490. So in that sense, it's actually overvalued. So if you were looking to open this trade now, I'm going to make the assumption you would say no. I'm going to wait for it to fall to an undervalued position, or how are you looking at it now?
Well, think about it this way. When I say it's at its future value right now, that's where they projected it to be. Now, these projections will change as they continue to keep presenting their quarterly and annual results. But if you want to bring up NVIDIA, let's talk through it. So I'm not really looking at it. When I say it from the standpoint right now, there's no advantage right now of buying NVIDIA straight out, right? There's no discount for it from a value investing standpoint, right? So when we take a look at the chart right now, I would say, and I'm just bringing up my version of it because I can't see your screen.
You just tell me what lines you want, not numbers, and I'll mark them out for our viewers.
I'm just bringing up the chart for me, so I'll tell you where to draw it.
Okay.
Where I would be looking potentially right now to maybe want to get in, not initially. So again, if I'm a value investor, okay, that ship is sailed.
Mm-hmm.
We're way above where I would look at sticker price and even margin of safety of where I could put this trade on right now. But say I wanted to protect my portfolio. What I would do is look at that zone right now, which is sitting at around, give me a sec here, about 295.55 to about 230. You can see it was right under that last breakout that we had on the pullback from 2018. And so this is going to be, I think, a good lesson for everybody there who may or may not understand options. But what biggest mistake most people tend to make when it comes to trying to hedge your positions is most people have learned the wrong way how to do it. Mm-hmm. Now, most people have been taught covered calls. Now, if I own 100 shares and my goal is to get out and get rid of all 100 shares, then I can sell one contract, which then obligates me to sell 100 shares of stock if I do get assigned. Here it's slightly different. Yes, you might own 100 shares of stock, but not all is created equal. So here's what I'd like you to do, Merlin, okay? Yep. Let's say right now there's 3 ways we can play this. If you're nervous right now, what you could do is we could say, all right, then I want to, just kind of making a line right over here, I'd be interested in maybe wanting to buy an in-the-money strike for the put, and let's just put down 520 for right now.
Okay.
520, okay? So that's slightly out of the money. So if I'm going to do in the money, I'm sorry, give me one sec. I might be looking at around 620. Let's just write down 620. Okay.
620. All right.
620 for in the money. If I'm at the money, I might be looking at around right now 520. That's my 520 number. And if I'm really wanting to use this as bigger protection, then I put it down to maybe where I'd be interested in buying it again, which would be around what I would say around 295.50. Okay, so you got those three numbers written down?
Yep, got them on. Yep.
Okay, what I'd like you to do is go to the option chain.
Oh boy. Okay.
Okay, we're going to take a look at some fun stuff. This is why we're doing this, right?
Yep.
Educate some people. And so what I want to do here is I want you to collapse the entire option chain and read off. You can see here, I could go out right now and buy an option to January of 2023. So I can go out right now in March of 2021, and I can get almost 2 years out there. But that might be a little bit costly, right? And we know that if price is going to drop, it doesn't tend to fall as slowly as it rises. So I might want to say maybe I'm going to put on a 6-month option. So maybe if I was buying protection right now, I might want to go out to maybe June or September.
Okay. Take your pick. I got either one.
So let's take a look at June first.
That's 3 months.
Yep, let's just take a look at that
for
now. So if we look at the put side of June, and let's go out to the strikes we talked about. So let's go out first to the in the money, okay? This is so important. If you were to move your mouse all the way to the right, Merlin, under the column that says Delta.
Yep.
Okay. See, this is where most people don't understand the right form of hedging. The delta effect, as it's called with options, right now says for every dollar that the price is going to drop, if we bought and again, I'm not telling anybody to do anything. I'm going to be very transparent. This is no recommendations.
Just education.
Educational purposes only.
Yep.
I'm just giving you an idea of how to hedge right now. That if I'm looking at 75 as the delta, for every dollar price drops, I'm making 75 cents. So I'm close to that dollar-dollar relationship. But if I don't position size properly, then I'm not covering all 100 shares, meaning that I want you to think about it as if I own 100 shares, I want to make sure I'm protecting all 100 shares. When it's at delta 75, then I'm only protecting at this moment, putting on the trade, 75 of the 100 shares. So I'll ask you, Merlin, and ask the audience, if I need to protect 100 shares, but my put is only protecting 75 shares, do I have a true dollar for dollar drop right now?
No.
Exactly. So that's how you have to think about it, that if I wanted to protect 100 shares and right now it's telling me 75, I have to be prepared to buy how many contracts then, Merlin?
Well, more than one.
Yeah, 2, right? 2 contracts.
1.3, I believe, but I don't think you can buy a third of a contract.
You can't trade options fractionally, so you'd have to go to 2 contracts. And then when you take a look at the asking price, and I'm sorry, we did the 620s, you got to be okay shelling out about $11,625. So some people might go, ooh, that's a little too rich, and that's per contract. So let's go to the next one. All right, what I want you to take a look at, read off to me again. What was the at the money strike that we talked about? 520, right?
520, right. And you're looking at a delta of 45.
All right, so what does that tell me right now? When I was in the money, I only had to buy 2 contracts to protect my 100. How many contracts would I have to buy if I was at the money right now?
Well, I mean, I was waiting for the audience to answer here, but I'll play along. I mean, if it's 0.45, you're going to have to buy, well, technically you have to buy 3. If you did 2, you'd only be covering 90 shares worth.
You got it. So now I'm looking at the 520s where I'm paying about $4,770 a contract, much cheaper, right? Mm-hmm. And now if we went out of the money and I look at where I'd be interested in buying right now, okay, then maybe what I would do here is say, okay, I'm going to go to the, and what did we say it was? I'm sorry, I didn't write it down.
I got it here. It's 295.
Okay, look at this at 295 right now. 295, we're only paying about $185 a contract, but look at the amount of delta here.
Yeah, I got to buy 33 of these things, 34.
So, but again, if we did $185 times 33, what's that math? I'm going to put my little calculator here. These are kind of the decisions that you need to make. But is it true that right now, and again, I'm going to say, what was it, 185 times 33, that's $6,100. So in a way, isn't that even cheaper than the at the money or in the money? Now, the problem is, and again, I want you to think of this like insurance. Okay, nobody thinks about every month you're putting money into a bucket in your garage, your driveway, and you're lighting that bucket of money on fire, right? And so you're happy you didn't get into a crash this month, and your insurance company is happy you didn't get into a crash this month, right? So again, what you're doing here is you're protecting your longer portfolio. So what's the lesson here? Number one, is this a company that I believe has the opportunity to continue to go higher? And when this corrective pullback happens, now do I want to consider buying more shares of Nvidia at a lower price with the opportunity for this to rally even higher? Two, is it even a company you want to own? If not, then there's no reason to go through this whole drill of finding it. And then finally, number three is, as it's dropping in a dollar-to-dollar relationship, how much money am I actually losing on Nvidia if for every dollar it goes down, I'm making the same dollar in profit? I'm basically doing what while I'm waiting? Letting it break even.
Right.
So that's kind of how I look at it. To your point about future, is I have to make a decision. Is it where it is right now and I want to get out? Do I think there's more upside opportunity? And how can I include options in my plan that helps me offset and protect my larger share portfolio? And you can do this not just on one company. You can do it on an entire portfolio and just simply, put it on puts on the SPX,
right?
The broader market, and protect yourself that way.
Well, I think it's probably one of the more underutilized pieces out there is utilizing options as a hedge or protection. And you're right. A lot of people think, I've got 100 shares of a stock. I'll just buy, one contract because that controls 100 shares. Well, yes, but you got to factor in delta there. I think it's a big piece of it.
So let's really put that out there. If I bought one contract, and we said it was the 295, Merlin, what was the number for
295?
Okay, and it's at delta 3. You're only protecting 3 shares of your 100 shares.
Yeah.
So that's why this is so important, to understand how to trade this the right way and not just simply go in there and try to wing this. Because I can't tell you how many students tell me, I lost more money, when it went down. Yeah. I thought the option was supposed to protect it. Yes, if you position sized appropriately for that dollar-to-dollar move.
Yep. There's a couple comments here. Algebra and Batista both saying AMD can come in with a bazooka just like they do with Intel. Yes, they can, and they are definitely they've destroyed Intel, but that's a different type of chip maker in my mind. I do think AMD is probably one of the top competitors in this space for Nvidia, but still Nvidia is without a doubt the lead dog. A bunch of questions for you. Sure. Kevin says, if this is what OTA teaches in stock class, when and where is Larry teaching it? Because it's definitely next on my list. We got a couple people asking about when you're teaching next and where. What is this class? Or is this a class?
Okay, there is. We don't teach the value investing piece, but I do have good news. Bashir Chaya, who some of you may know, he's very active teaching in the XLTs in the mastermind community. He came to me about 6 months ago, and we started talking about a signature series for him. And he included value investing, and he asked me to kind of help him out. It's a great class. It's available right now. So this is on your kind of bucket list to learn this. You can go right in and talk to your center or your enrollment specialist. It's called Prime Your Portfolio. Prime, Prime, Your Portfolio, Bashir Chaya. And he's teaching it right now. So a lot of opportunity to get in there to learn the same things. And he will take you through the entire process of searching for these type of stocks, how to analyze it, and how to come up with the intrinsic value that I was talking about of what the stock truly is worth or should be worth today. And the best thing we can do is find a stock that's actually cheaper than what it's truly worth. So for example, with Nvidia years ago, the intrinsic value of the company, which means if we sold off the entire company today, piece by piece, it should bring us about $100 a share. And that means they take the total amount the company's worth, dividing it by the total amount of outstanding shares that are offered for Nvidia. And that's how they come up with intrinsic value, a couple of other things as well. But the stock was trading at around 36. How many of you would have loved to have bought a $100 stock for $36. And even right now, let's face it, this thing could drop from 400 to 300, and you bought it at 30. Are you going to be freaking out? And so why I bring this up is in 2008, when everybody was panicked in the fetal position on the floor, Warren Buffett was like, I bought it so cheap, it's not impacting me. And then he went out there and saw this as an opportunity to start bargain hunting for those stocks that were undervalued to what it truly should be worth had there been all things considered equal. And so this is why it's a great class to learn. And I think Bashir did a phenomenal job. And like I said, I was very involved with him, helping him and just kind of questioning some things to make sure it came out the way we wanted it to.
Bashir's awesome. I've been working with him a lot on the new Forex on demand stuff. He's really a phenomenal guy. Are there prerequisites for that class? Do you know?
You have to have taken, I believe you have to have taken core strategy.
Okay, there you go.
Yep.
Awesome.
As far as teaching, I'm actually teaching the Options 2 class. I haven't taught as much. I'm teaching Options 2 online April 26th to April 30th. It's the new revised intermediate course we just built. Merlin was very instrumental in helping me with that. I think it's a great class, and definitely if you're looking for things above just normal long call, long put, covered calls, then we're interested in spreads and how to further reduce risk. This is a great class, Options 2. So again, talk to your center about Options 1, Options 2. They're a great complement to each other.
Oh boy, I got to tell you what. There's there's so many questions coming in, but I don't want to go too much longer because we have to get you off the air. I mean, geez. I'm gonna ask real quick for Rob. It says, how do you value a company? Where's the information found? And we can keep it high level. Maybe next time we can walk through a little bit deeper on it. But just what are you looking at? So basically, you're looking at the income statements, the balance sheets.
More than that. It's talking about free cash flow. There's a lot of things that go into this analysis. And that's why it's, once you understand where to go and what to look, and one of the things that I really pushed Bashir on was I wanted it to be a calculation sheet that literally all you have to do is plug in the numbers and it will give you that information. So we worked on a worksheet together that does just that. So it tells you where to go, a whole screening thing that we have that you can screen for them. And so it's kind of a 3-step process: screening for opportunity, how to go about analyzing to make sure it's in the right setup for us, and then how do you go about executing it. And as you said, Merlin, I kind of go a little bit deeper than just even the value investing piece, where I'm looking at using core around it to help make an even better decision.
Yeah, and hey guys, I'm showing you as we was talking about this. If you just go to Yahoo Finance or any real finance portal, you can go to the fundamentals or type in your ticker symbol. On this one in Yahoo Finance, I've clicked on the fundamentals, or I think it's financials, excuse me, right there at the top. And you can see I've got income statements, balance sheets, cash flow, and there's a lot of different metrics that Larry's looking for, and also Bashir and some of the content he's doing. So that's it. Okanola, why were you buying puts to hedge in the example you just went through? It's just to protect, right? Okanola, it's really saying, look, we're not exactly sure where we think Nvidia is going to go. Based off what Larry's analysis says, we're pretty much where it should be. So if you are holding a position, it's just a way of saying, I don't necessarily want to get out, but I'm going to protect myself. Should it start to have a big fall, I'll protect myself. So that's going to come in like an insurance premium for your house, right? Look, I don't think my house is going to burn down. I don't think I'm going to damage anything. I don't think the pipes are going to break. I don't think anybody's going to break in and steal anything in my house, but I still pay homeowners insurance for that one-off chance that it happens. And to me, what Larry was showing with the buying the put options is that's exactly what it is. It's saying, I don't think that Nvidia is going to tank, but if it does, because it's probably more likely up here at $400 or $500 than it is down to 20, then I'm going to protect myself a little bit. And Larry's point here, this isn't just about Nvidia. This is for every one of us that are sitting there holding shares at market all-time highs. As a safety measure, it might make sense to buy some puts as a protection if the numbers make right in the option chain, etc.
Yeah, absolutely, because the thing we don't know is what's going to happen next, but I want to have a plan for that. And so that's why if I could use options as protection, worst thing that happens is you have to be okay giving up or losing the premium that you pay for that protection. But again, if it starts to rally even higher, then I use that as a reference. Right now, we're kind of at future fair value. This is where they projected over the next 5 years that it could be. So a couple things could happen. We might see a corrective move back. Now we're protected in terms of being able to see price drop, or we start to see the rally. And then it basically was just used for protection, like your insurance for car.
Right.
Nobody likes to pay it every month, but we're going to pay it because we don't want to be in that situation where we wished we did.
Right. All right, real quick, bring up a ticker symbol just because Angel asked at least a dozen times. We do not have time to go into the fundamentals on this one, Angel, so we'll do a pure, quick technical view of it. The ticker symbol is PLTR, Larry. It's Palantir Technology. I'm looking at it right now. This thing really doesn't have a lot of history, right? Obviously, it came about rather recently, less than a year on the market, is being publicly traded. This is a company that I believe does counterintelligence software and just basically software for the intelligence industry, etc. Anything there that makes you feel excited, pessimistic? Do you have any thoughts on this one?
No, because, when I'm dealing with value investing, it's an established company. It has to have had a certain number of years that it consistently stated within a certain rate of return. So because they're so new right now, it's there. Now, what this is looking at, I would presume this was IPO'd not too long ago. What I would say is, and it's funny because I remember years ago, when I was back at the Universal days, Merlin, I was with my two bosses before I left, and they said, "Okay, Mr. Buffett, what do you think of Facebook?" And at the time, Facebook was at 60. What normally happens is we haven't really seen the institutions come in yet, have we? So we're looking here. You might have a little bit of this rally-based rally, but remember, this thing was down at $10. I would probably wait a little bit longer just to see what it does. It could go higher, but it could go lower. So there's not enough history for me yet to feel comfortable enough, unless you want to do more shorter term trading. But this would not be on my list for a long-term value investing trade.
And even as a technical trading one, it's really not on my radar as well. I mean, you do have great volume on this thing, which is fine, but I don't see any discernible patterns here, Angel. It looks like just a lot of chop. So I'm not a fan of this one. It wouldn't be a tradable one for me. It just doesn't meet criteria. Like, I want to see pronounced supply and demand zones. I want to see a strong trend. Right now, since December, this thing's just been really chopping back and forth. So it would absolutely not make it into my trading repertoire until something in that area changes. All right. Guys, as you might recall, Larry is doing a lot for the OTA community, and thanks for all that you do. I'm looking at his calendar right now. You know what I thought? Let's send people the calendar. I'm just going to actually show them the calendar. Why not? Here is the calendar that Larry's got cooking. Today, you got an XLT today, buddy.
I do, in Strategic Investor. I'm covering for Jordan Matthews. He's teaching a class, and so I'm going to go in there and just rock the room.
Wow. All right. Well, he's got XLT for strategic investing today. You can see he's got XLT for options trading on March 22nd. If we go into April, you'll see there's should be some more stuff there. Well, no, do we not see stuff? I thought you said you had him. Oh, it's loading. It's just going real slow.
Yeah, April 26th to 30th, I'll be teaching the online Options 2 class.
There you go. Well, it was supposed to show up. I was all excited because I would share this calendar with you guys, but apparently it just does not want to show me the month of April. But Options 2 class coming up because I know we've had some questions on the Options 2. All right.
And I was going to say, and again, if you're interested in learning more about the value investing piece and you're a student, check out that Prime Your Portfolio Signature Series.
Yeah, absolutely.
That's a lot of great information that, a lot of the questions you're asking right now are addressed in that class.
Excellent. Well, hey, Larry, thank you so much for coming on. I know you're super busy. I feel blessed to have gotten you. I usually a half hour, I feel gifted, but I've got you for 49 minutes today, so I'm feeling really special. So thanks so much for coming on and sharing NVIDIA and just the longer-term perspective. I do appreciate it.
You got it, Merlin. Good to see you. Guys, be safe, and trade your plan.
All right, we'll see you later, buddy. Take care.
Bye, guys.
Guys, that was Larry Jacobson of Online Trading Academy. As we mentioned, he's got a whole bunch of stuff that he does for the OTA community. You can find out more information by going to tradingacademy.com. And if you're an OTA grad, just go to my OTA, or your OTA, I guess you would call it, and find out when he's teaching and schedule. Yes, so I saw the comment on the shirt. You guys like that one? This is one I've got a long time ago. Can you guys guess what it is? Do you get the shirt? Come on, take your guess. One of my favorites. It's I'm a nerd. I'm a total geek when it comes to numbers and things like that. So I self-proclaimed nerd, I guess. Anyway, okay, cool. Where was I? Let's make sure we can wrap this up before an hour. I was going to wait for your responses to that one. I'm going to show you some economic calendar and earnings pieces. I'm glad we got to have Larry on. Yes, it's a pirate. You got it. But I'm dumb. I know. Total dork, but it's fun. Hopefully you enjoyed that one. I think Larry brings something different to the table that I don't, which is I don't really care for the long term like that. The only thing right now, as of this moment, that I'm thinking long term, like 5 years, is cryptocurrencies and Bitcoin, because I feel like it's it's so new and hasn't really even infiltrated all of our societal needs and norms that there's much greater opportunity there. When it comes to companies, though, that's challenging. I don't like to hold for that long. You know, I can tell you that on that Boston beer example he brought up, I would have gotten out a long time before it got to 1,000 just because it dropped over 50%. I'm not going to be in something that's up 200% and let it go down over 50%. I mean, come on. It would be demoralizing to me to know that I had this massive winner and then all of a sudden I'm like, oh God, I barely have anything. It's like, I'm not gonna let that happen. I'll buy back in if I need to, but you know, who knows? At that time, it could have gone bankrupt. You know, who knows what Boston Beer would have done. So yeah, those types of things, that's where it really boils down to who you are. What is your personality makeup and how do you deal with that stuff? Larry, he's laid back. He's chill. He's not worried about it. Let it do what it's going to do. I got to take in some profits, sell half, let the other half go there. Okay. To secure that shirt. Bald head bees, unfortunately I don't have multiple. I would say I would give you this shirt, but I actually like this one too much to give it away. All right, let's look at your economic calendar for today, and then I want to show you mañana. Here is what we have cooking for today. And the only reason I bring this one up is because the bond auction, you know what? After we talked with Bill yesterday, we were both kind of skeptical on the 30-year. You notice that the 2.3 number here, that is the days to cover here, and that is bid to cover ratio. It was actually better than expected. So that was actually pretty good news. The only thing that's bad about this is the yields jumped from 1.93 to 2.3. That is a pretty significant move up for bonds in 30 days. You know, we'll have another auction in 30 days to see if this gets any worse. But that wasn't as scary as it was the previous month. Now, we also had some interesting numbers here with regards to the unemployment claims. You can see the continual dropping. Again, we beat expectations, even lower on unemployment claims. And remember, the more that we fall here on unemployment claims, the more likely we're going to see the Fed back away a little bit with regards to stimulus, and things might get back to normal a bit sooner. But this number for me, that unemployment claims average, a couple years back is about 250 to 300,000 a week. So we still got a ways to go there. Here's what it's got for mañana economic calendar for the 12th. Mainly, it's Canada. That's the big one out there. You have employment change, unemployment rate, and then capacity utilization rate, as well as wholesale sales. So Brendan, who's not with us today, he's going to have some wild moves in his market, or at least some factors which could create wilder moves. Now, we had our CPI number also on yesterday, and that number came out better than expected. Really, no big deal. Well, we have a number that's got much wilder expectations. You see here the producer price index, that's PPI. That means what it costs producers to make this basket of goods and securities, or basket of goods and services. They're expecting to see a big drop in that number. So basically what that means is that the producers should have a lot more profit margin going forward, and that could impact earnings. You can see how this is a big domino piece. But we'll see if this number comes out, in fact, as low as they are anticipating. Right now we're expecting 0.4% increase month over month in producer price index numbers. All right, cool. Whew, we got a lot in there, and I'm going to be done by 3 o'clock. I'll be done by 3 o'clock. Yeah, we've done way before that. I'll be done by the top of the hour. Cool. Well, I hope you enjoyed that one. Again, if you are new, I know we've got some new people here. Feel free to click that subscribe button, a thumbs up if you like today's show. I think that there's a lot of value to what Larry brings. It's just a different mindset, and that's why I love bringing on all these different people, because I don't want you to think that one person's style is the best. Everybody brings something to the table, but you got to figure out which pieces of what they bring fits you best, do you like best, or are you hoping to achieve? So Alan G says, by the way, where do you get those economic events? You can get them on any financial news site. You can get them on Yahoo Finance, Forex Factory. I think you can get them on MSN. You just type in an economic calendar in Google search and you'll pop that one up. This one is from Forex Factory, but there's a bunch of different sites out there that present in different ways that you might find more appealing. What else do I got? Do you think at some point your account becomes big enough that value investing is better than trading because of liquidity issues? Good question, Alan. No, I don't. I think that if once your account gets big enough, you just do different things with it, right? So if your account gets so big that you're no longer needing to have, your 8% return per year, you're happy with 5, well, maybe I'm going to jump asset classes and go into bonds. So I'm getting a lower rate of return, but also mitigating some of that risk. I would also be maybe spreading around to different asset classes. But no, I don't think the size would dictate that one style is better than the other. By the way, I did not give a shout out to someone who did. Ken, thank you so much. Ken gave me a little contribution earlier. Always appreciate that. I didn't give you a shout out when it happened, but I didn't forget it. I saw it as I went through. Larry was mid-conversation, so I didn't want to interrupt him. But again, I appreciate the donation there, Ken. Always appreciated. Big Ed says, hopefully Larry can come back on soon. Yes. I'll try to get him on more. He's doing so much. Because of what happened at Online Trading Academy, it's really a skeleton crew right there. So Larry is one of the absolute workhorse. He just does so much on so many different fronts. And, when you guys get to see him, what he really loves to do is what he just did, which is let's talk about markets, trading, investing, asset allocation, options. He loves that type of stuff. But, he is doing a lot with the instructors and content development. So he wears many, many hats. So just to get him to come on the show today was a real treat. I'm going to do my best to get him on more. I'm also trying to get, as I can see Okunola saying, bring in Jerry Baldwin. Yes, I'll get Jerry Baldwin on the show. I'm trying. Also, Todd Davis is another one that I really want to get on. And I'm hoping that I can get Kayla Christine on the program. Some of you might know Kayla. She teaches core strategy and futures. Just not only is she beautiful, but she's fantastic at trading and investing. And she's really young. It's one of those things where you're like, wow, I think a lot of men might have an issue taking a class from her because they're like, oh, who's this young girl? She's just, the Barbie doll of the trading world. No, she's very, very smart. She actually, what's great about Kayla is she travels around the world. I think she's in Spain or Europe somewhere right now, and she trades and builds some content for extra cash, but she's really just trading from around the world, which I think for most of us is the dream, right? Let's trade from around the world, etc. Yes, Mike McMahon's on the list. I feel bad because Mike McMahon, I don't see him on a regular basis, so I kind of forget about him sometimes, but yes, I will bring Mike McMahon on for sure. And Tilly is going to be on, Tilly's on next week. So next week's calendar, we got a pretty full one as well. I will let you know. You can actually find out all of the guests that are going to be on the show next week by simply going to your TraderMerlin webpage at TraderMerlin.com and find out there. There's a calendar on there that I try to keep updated. I know I haven't been the best at updating things. It's just one of many, many pieces I got going on. But as far as guests for tomorrow, we are going to have none, right? It's going to be me talking cryptocurrencies and a lot of crypto because you guys have so many questions on them. I'll try to do mostly crypto stuff. So if you want a specific area covered, email me at tradermerlin@gmail.com and let me know what you want me to cover, and I will do my best to get that out to you. Let me real quickly run through next week's schedule. You got Scott McCormick on Monday, Diana Hill talking real estate on Tuesday, Tilly Allison will be on Wednesday, and then we're going to have David Warner on Thursday. So we've got a full week with regards to presenters and content for next week. But tomorrow should be a fun one. Here's the email. It's tradermerlin@gmail.com. You guys know it. Most of you do. If you're new, write it down there. A ton of crypto stuff. And, one in particular I thought was interesting. Somebody was starting out and was asking about the different platforms. And they wanted me to show executions on each one. I may do that to show Coinbase, Kraken. If I can get into my Binance, I'm having problems accessing Binance. So I will reach out to them again and see if I can get that one. But I'd like to show you all these different platforms, talk about commission fees, talk about structures, the functionality of the platforms. Also, there's a great question about how do I transfer, money from my Coinbase account over to BlockFi, right? Well, it's actually incredibly simple, but there's just no clear directions. Like nobody really shows you how to do this stuff. So you got to teach yourself, but I will show you that tomorrow. All right, that's going to do it for me because I'm lingering on here and I got about 15 seconds before I got to wrap up this show, so I stay under an hour and don't give you guys a satisfaction. Anyway, thank you guys so much for all the questions. I hope you enjoyed it. Yes, I am listening to all your emails and questions about different guests in the program. I'm trying to get everyone that you recommend on. It'll be a task, though, until I get some secretary working for me or someone to help me out here. So anyway, thank you guys so much. Yes, tomorrow will be a beer or a whiskey day. I'm feeling like it might be a beer day, but I will see you guys all tomorrow talking crypto. Take care.